Good morning, good afternoon, everyone. Welcome to our October edition of ARIVE Partner Spotlight. ARIVE Partner Spotlight is a monthly series that we have launched in which we bring experts from the mortgage industry to talk about topics that are relevant in today's market and can help you grow and scale your business. My name is Harish Tejwani. Me, along with my colleague Amy Hulett, will be moderating our session today. If you have any questions, feel free to use the Q&A tab below. You can put your questions there and we will take them as they come. We are close to 2 weeks shy of Halloween. The spirit is in the air. And I'm really spooked up about this awesome panel that is joining us today. So we have our partners from the Loan Store joining us today for ARIVE Partner Spotlight. I want to thank Loan Store for their partnership. They actually joined ARIVE sometime mid last year. And in Q1 of this year, Loan Store acquired substantially all origination business of HomePoint. Some of the panelists here have been my personal friends for many, many years. And I'm so excited to have them today. We were discussing with Loan Store about what topic should we take for Partner Spotlight, what would be most beneficial to our broker customers. We live in interesting times. Rates have been higher. They're close to 7.5, 8%, higher than almost 2 decades. The volume has gone down. MBA is forecasting close to 1.6 trillion total originations by end of 2023. And what we hear is rates are not going down anytime soon. They will go down nominally next year. But what we are going to discuss today is what can you guys do that can help you win more business today. So I want to start by introducing my dear friend, Will Pendleton, who is the Chief Revenue Officer at Loan Store. Will and I go back many, many years. So Will, tell us more about, how do you think the products Loan Store is offering can help our brokers? What kind of unique programs or niche programs that you are offering in the market that can help our brokers grow their business?
Yeah, thank you, Harish. And I think you hit on it. Our partnership stems back. We were one of the first to get set up and to welcome ARIVE back in our HomePoint days. So, I just want to first call out and just say thank you to you guys for having us. You guys have been great for the broker industry. You've helped to bring real technology and the funny thing, we've worked with a lot of tech vendors over the years, and there's often a lot of promises, and their batting average is kind of like a decent baseball player, and you guys are more, you're more consistently hit the mark, and you guys have done a tremendous job of building a platform and hitting your marks and continuing to iterate through. And I'm really proud of what you built. So, we're happy to be partnered with you all. I think that, to answer your question, as we've transitioned over to the Loan Store from HomePoint, we're very focused on recognizing the market that we're in and delivering value for the broker network. So, what we're going to focus on the most today, I recognize that a lot of folks don't know who the Loan Store is yet, right? Or maybe they understand who we are and they have a relationship with us in the past, but they haven't actually interacted with our new platform, right? So I do want to give some credence to those individuals so that they understand why they should care about the Loan Store. So I'll kind of highlight that. And then we've got some great experts on the panel today, some of our best and brightest and our closest partners that are going to step into what we call our differentiators. So to come back to your question, Harish, we've been working really hard over the last 6 months. We've been very focused on differentiators. And what I mean by that is in a market like this where opportunities are scarce on the primary loan side or the traditional vanilla product side, you have to search for unique opportunities to open doors. And I think we've done a really good job of that. I'm very proud of what the team has done with respect to adding over 12 states. When we started at the Loan Store, I think the best way to encapsulate what that transition is we brought a very experienced team, some of our favorite folks that we developed a really strong bond and culture with, and we supported, tremendous growth at Home Point with some of the same key individuals that we brought over to the loan store. But we were stepping into a platform that only had, 28 licensed states. It was kind of a clean start, a fresh start. And what we've done is we've jumped in with our team. Everybody's been running really hard, 100 miles an hour every day. And we have seen more progress because this is the third platform that myself and Phil Shoemaker and team have participated in building, back to Caliber, then Home Point, and here. And what I've seen here from our team, from the legacy folks at TLS and the folks that came with us from Home Point, is a tremendous amount of progress in a very short period of time. So we've added 12 states to our footprint. We're closing in on 48. I think we'll get to 48 by the end of the year, which would just leave, New York, who is always, takes their time. And one other that's actually missing my mind. But so our state footprint has grown tremendously. We've added a lot of products. So we finished out our product offering. So we have full Govy product offering in addition to jumbo, non-QM, and agency. So you've got all the products that you would expect. The tech is getting dialed in, and we've made a tremendous amount of progress there. But then we had to say, okay, what else can we provide brokers with that will help them to grow their business and navigate a very challenging environment? And that's when you have buy before you sell. And that's when you have our fast pay 5-day HELOC. And that's when you have our hard money line of products that we're going to dive deeper into today. We like to call those products our differentiators. We have an exclusive relationship with HomeLight, which is the partner that is really an innovator in real estate technology. We've got Sam on the line here to talk more in depth about the buy before you sell product. That is something that is absolutely growing week over week, month over month. There are opportunities to grow your realtor network and strengthen the realtor relationships that you have right now, because that's a very unique product. What I would offer to you guys, I'm not going to go all the way deep into it, although I'd love to. I'll let Sam do that. I'm not going to steal his thunder. What I would say is listen and walk through the layers of value there, because as you get more familiar with how to talk about that product and the value that it brings for the otherwise trapped opportunities where people want to move, they need to move, but they can't. And they just see it as an overwhelming, problem to solve, right, in their current situation. That product does a really good job of relieving the stress and making that an easy transition. It opens doors for realtors and for brokers, and you can use it to grow your business tremendously. So we're really, really excited about the growth and the consistent progress that we see from the buy before you sell opportunities there. And we're just, really trying to be very focused and very intentional about equipping our partners with the knowledge that they need, with the support that they need to grow their business by using these kind of door opener products. Philip's going to talk about HELOCs and hard money. We actually own a hard money lender, and that's another really unique thing in the wholesale space. So yeah, I think the way to think about the loan store is, if you did business with us at Home Point, you saw us grow from $250 million a month to $10 billion a month. We became the third largest wholesale lender. I would say that, we talk about products, we talk about pricing, we talk about technology all the time. The core fundamental strength that we had then and the strength that we've taken with us now is the same. It's the people. The quality of our people is tremendous. The people who are on this call and the people who stand behind us every day are fantastic. I actually have never felt better about the culture that we developed over the last few years. So yes, we have a lot of growth in our future. We will support anyone. And the other thing is the people that we have are very experienced, and they also recognize where we are in the market. They recognize opportunities are scarce, right? And so when you send us a loan, especially for those of you, this is really a message to those individuals who haven't had an opportunity to try us out. We know that you have fewer opportunities. We know that they are very important to you, to your financial outcome, to financial health, and to the strength of your referral network. And what I would say is, whether it's Teresa, who runs all of operations for us, and the people on her team, whether it's the folks that work for Philip, who runs all of sales for us, our AEs, I would put both of our support networks, whether it's the sales team or the ops team, I'd put them up against anybody in the market. They are absolutely, people who have tremendous amount of hunger and drive to give you great service. They have a ton of experience. So we know that every loan matters, and we're going to really work really hard to earn your trust and to make sure that we can navigate these tougher scenarios, right? The scenarios are not getting any easier. And you need experience to help navigate that. So, I think it's the people, and then certainly the product differentiation that we're striving for, that, we're gonna continue to add value as we grow.
Yeah, thank you, Will. That was a great introduction. Again, we also greatly appreciate the partnership. For those who don't know, Loan Store only works with TPO. They are all in with broker channels. They are big broker advocates. They don't do retail, correspondent. So they are very much like ARIVE. We are also all in with the broker channel. That's all we service. That's all we do. So we have a very, unique cultural alignment as well. I'm going to do a quick poll before we dive in. And as I mentioned, if you have any questions, don't hesitate, put them in. We have experts here. They'll answer any questions you have about the products, Loan Store, anything else. So here is a quick poll to the audience that talks about So if everybody can take a second and answer this question, given how the markets are, how many brokers today are using niche products like buy before you sell, or at least have heard of products like buy before you sell? Or, you would like to offer these products, and that's kind of why you are here. That's our first question. And the second question is, how many brokers today are selling second liens, like HELOCs? So first question, how many of you are selling buy before you sell, which is purchase focused? And how many of you are actually selling HELOCs? So we'll give a few seconds to everyone to take this poll. So the answers are still coming in. You're welcome to ask any questions you might have. All right, so I'm going to end the poll in maybe 5, 4, 3, 2, 1. So thank you everyone for participating. So it looks like 20% of the audience does understand or has leveraged a product like buy before you sell, which is good to know. So congratulations. However, 80% of you guys have not used it and want to learn more about buy before you sell. On the HELOC side, it is 43% of you guys are actually selling HELOCs, which is great. So congratulations again. But 57% of our audience is not using second liens. So we'll kind of walk through how you guys can leverage second liens to grow your business. All right, so we'll get started. Maybe on the next. So Will, how do you want to do it? So we want to start with buy before you sell.
Yes, let's kick it to Sam from HomeLight. Let's do that.
Awesome. Not to get redundant, but thank you for having us arrive, and of course, thank you to the Loan Store for allowing me to participate as well. It feels like part of the Loan Store family at this point, and that's kind of how they run their business. It really feels family run and family oriented, and it's an honor to be here. As HomeLight kind of goes into this lender facing world, we've really dove into this third-party lender concept, specifically giving loan originators and mortgage brokers access to more products. Right now, we have buy before you sell, this modern bridge solution designed to help contingent or pending sale contingent clients move forward on their new purchase mortgage. As we go through this, I want you to think of this as your product, right? Like how this will help you grow your business and help more clients realistically, specifically through this market and through the next couple of years. The product has a few major propositions, right? Again, think of these as your own, right? You're the contingency buster, you're the DTI hero, and you're providing this equity unlock. How powerful is that as you roll this out to your agent partners, as you market this product, as you try to grow your business, shake more hands to be able to emphasize what you can do now? We accomplished the top two, right? This contingency buster and the ability to omit the departing resident's mortgage liability through a backup offer we place on the property. So Fannie Freddie told us in the Loan Store that if we put an offer without a financing contingency on the client's current residence that you can go ahead and omit that liability on their new DTI ratio. Think about how many clients come through the door with an 86% DTI and don't understand that they need to sell their current home before they move forward. This is their solution, right? Buy before you sell. Your ability to omit that liability gives the agent the ability and the client the ability to remove the pending sale contingency on their next offer, making them more competitive, allowing them to win faster, and even save money on that offer, right? So on top of these two propositions, making things more convenient for the client, you or us or the loan store is also going to provide an equity unlock, giving the client access to a 0% interest bridge loan up to 70 to 75% of the value of their departing residence, right? So up to 70 to 75 CLTV based on their current home. So let's say their home's worth $1 million and they have $500K left on their mortgage balance. We can theoretically give them a $250K, 0% interest, no monthly payment bridge loan to use as a down payment on their next home, right? So simplifying the processes behind the contingency and the mortgage liability, and then just allowing them to tap into their equity to use as a down payment on their next home. They can also use these funds for minor repairs. They can use these funds to pay off debt, right? If they have $12,000 in credit card debt and it's hurting their DTI, they can use our bridge loan to help support that. They can use our bridge loan to help stage their property, maximizing their sales price of their home, truly taking advantage of all the propositions of buy before you sell. To break down a sample transaction in 4 easy steps, right? The first thing we're going to do is get your client approved. They're going to shop without a pending sale contingency, making them more competitive. They're going to go under contract on a new home. We're going to wire the funds directly to title. They're going to close on their new mortgage, right? And then sell their home on the open market, making it as simple and easy as possible for them to move forward on their new purchase mortgage. Feel free to jump to the next slide. So these are some common FAQs, and Amy, feel free to ask away, or I can run through these myself, whatever you prefer. But the cost of the program is 2.4% of the sale of the home. Compare 2.4% to a client submitting a pending sale offer. What's the cost of submitting a pending sale offer? There's a dollar figure on that, right? How much higher do they have to go than their competitors to win that contract or win that home? Let's say they do win with a pending sale offer. What's the cost of trying to quick sale their home in 15 to 25 days? Like, how much lower do they have to go in their listing just to get their home off their books and sell it within 15 to 25 days? Those reasons and more are what make our 2.4% the most convenient solution for your clients, right? And you know the propositions now. As you roll this out to your agents, it makes it very easy to shake hands. These agents that you've been buying coffee for 5, 10 years, or even 5 months, who knows, or new agents that you've never met before. If you lead with buy before you sell as your new product, it's going to help you grow your business. Our equity unlock is just simply our 0% bridge loan, right? And we talked about our backup offer just a little bit. It's based off the liens on the property, but what truly separates us from the rest of the competition and HomeLight's buy before you sell in general is we don't actually want to buy your client's home. We want them to sell their own home in our 90-day program period, right? Or at least go under contract on the sale of their home. And if they don't, we have upside protection, protecting them in a worst case scenario. We work fast. If the home's already listed, even better. If the client's already under contract, even better, right? But this is an amazing tool to help you grow your business.
Sam, is this something that the loan officer would be just submitting for approval? You mentioned the first step is just getting approved, right? So this is the first step. They're submitting it to the loan store, getting all their ducks in a row to be able to offer this product. Is that a pretty easy process? Maybe someone from the loan store can speak to that. Is it pretty easy approval, or is there any appraisal involved or evaluation of equity?
So we have a co-branded interface that allows the LO or the mortgage broker to jump in and upload the file for approval or upload the client for approval. We're asking 12 questions around the credit profile itself. So as long as the loan officer has done a pre-approval on the client, or at least pulled a credit report on the client, they should be able to answer all of our questions. So no doc approval from the loan officer. We simply send out an email after that, CCing the agent partner and say, hey, Susie, the agent, can you go ahead and answer us a few questions on the property itself? We get that back. Boom, within 24 hours, your client should be approved as long as they meet our qualifications, right? So your client that's in a pickle on a Thursday is shopping without a pending sale contingency by Friday afternoon, right? And they also have access to the bridge loan in their back pocket. So even if they have $0 in the bank, they're approved within 24 hours as long as they check our boxes.
Wow, that's really fast. That's pretty amazing. So how is this product, how can mortgage brokers grow their business with this product? Or what are ways that they can engage with their referral partners and really sell this product to them?
Great question. So we like to white label this product as much as possible, right? We want to make this Amy's buy before you sell, allowing you to go shake hands with your agent partners, go introduce this to your product to your agent partners, to the point when your agent partner has a client come through the door who needs to do something with a departing residence. They come back to you because you just presented this product to them 2 weeks ago, and they loved your solution. They understood the benefits of the solution. They understood the efficiency and the cost effectiveness of the product itself. They also understand that they've worked with Amy many times, and they understand her processes and how she treats their clients. And they're not sending her off to some islander to get lost in space, right? They understand how you operate and that you're growing your business through a product called Buy Before You Sell, and that it's your product and you're going to manage the transaction properly.
Yeah, I would add to that the interest that we've seen from realtors has been tremendous over the last 6 months. We've seen consistent, feedback where, an initial conversation happens at the broker level, and then they're inviting us back to do a virtual meeting and present to their entire office. And so I think, that's why we've seen the consistent and steady growth of, the lead pipeline and the loan pipeline that's associated with this program. As more people hear about it, they're then asking for more information, and then they get more familiar and they go out into their referral networks with it. And I would say, just to pump Sam and his team up a little bit, they're really good at supporting our broker partners. So, we don't expect you to understand the nuance of this right off the rip and be an expert. You can actually engage with the HomeLight team, engage with, our team at TLS, and we'll support you in marketing this program into your referral network. So we'll get on the Zoom calls with you, and we have, a library of marketing information to help you get the word out. But, yes, we'll help you to develop your expertise. Absolutely. We've got deep dive trainings that we do. And obviously Sam and his team do a great job with that. But then additionally, we'll do it with you, we'll do it for you, and obviously promote you in the right way, direct to your network in the event that you're interested and you have realtors that are interested in understanding it.
So Sam, some questions on licensing. Does the broker has to be licensed in these states? I know this is where you offer them, but what about the broker licensing?
So we just need we only care about where the departing residence is, right? So let's say the seller or the client is selling in California and moving to Nevada, perfectly fine. But we can't do vice versa. So as long as the loan officer is licensed in the state they're moving to, perfectly fine. And to clarify, I didn't hint on this, but thanks to our strong partnership with the Loan Store as well, we are also going to be in 48 states by the end of the year. So if you're not blue right now, by the end of the year, you will be, or hopefully, unless you're in New York.
It's coming. We're making a lot of progress on that.
And I think you answered that. How long does this 0% interest on the bridge loan last? Let's say they cannot sell their home for 6 months. Share some light on that. How does the process work?
Yep. So our 0% interest, no monthly payment bridge loan is set to be paid back when the home sells, right? So we know technically it's a balloon note. but the client won't be due to pay it because it should come right as a payoff once their home sells. Again, we want your client to go under contract in our 90-day program period, right? We have a 120-day max, right? If they can't go under contract in the sale there, we do step in and buy the home, but we've only had to buy one home out of just under 1,000 transactions. Again, something that really separates us and you from the competition now is we want the client to take full responsibility and sell their home for what they want, when they want, after they've already moved into their new home with their family, and then stage their property and sell it at full market value, making it as marketable as possible with the help of their agent partner. If they can't sell it, we have our backup offer, right? We purchase the home at our loan payoff value. We put it back on the market using the same listing agent, hopefully sell it at 100% of the value. And the client receives the excess funds less any fees incurred during that purchase and sale. So even in a worst case scenario, the client does have access to a backup plan.
And what price do you purchase the home at, Sam?
Yep.
Is there an appraisal done, or how do you come up with a fair value price? Go ahead.
Yep. So during our approval phase, we essentially tell the client what we can lend up to. And then we also come back with a loan payoff value, our backup offer number. Sure, it's written at 75% of the value of the home, or whatever liens are on the value of the home, right? But that being said, it's there to remove the pending sale contingency and for the lender to be able to omit the liability. We don't want to buy your client's home. We want them to sell it at full market value during our 90-day program period. But if we have to, we'll buy it for that roughly 75% number, hopefully turn it around and sell it at 100% the next week. So.
And the client is still responsible for mortgage payments of the home he's in right now, right? So he's still, you're giving him a bridge loan to go make a down payment, but he's still on the hook for any mortgage payments, correct? In the 90-day period?
Technically, yes, but you can use that 0% interest bridge loan to help those, right? So you can take an overage from escrow once your client can take an overage from escrow once they close on their new mortgage, and use that 10K overage to help with mortgage payments or help stage their property or whatever they see fit.
I have a quick question on the underwriting piece for the purchase. You mentioned, Sam, that you had gone to Fannie Mae and that this allows you to exclude that existing home payment, right? If they're in a certain stage in contract. Is this a Fannie Mae specific product or is it also available with Freddie?
Fannie, Freddie, right? And also jumbo through the loan store. So really important to note, exclusive partners with the loan store, Fannie, Freddie, high balance, and jumbo. VA, FHA, and USDA will not allow you to omit the liability. This is a Fannie, Freddie guideline.
Perfect. Wow. Well, it sounds amazing. I love that there's so many tools and ways that you all are helping loan officers take it out to the street, so to speak, because I think that's the biggest hesitancy is they haven't used it. They don't want to appear like they're not the expert, and they don't feel like they're an expert until they've probably done multiple transactions. So for you guys to be able to really help them in that and get on the Zoom calls and help present this to agents is really awesome. So thank you for sharing and for being great partners with the loan store on that.
Of course. Thank you.
Do we have any questions, Arish? Or
no, I think we are pretty good. Again, appreciate Loan Store for arming our brokers with such valuable tools where they can win more referral relationships, get more clients. So thank you for that. So we'll go into the next segment if everyone is okay. So maybe Philip, do you want to?
Yeah, that sounds great. Thanks, Sam. Definitely, the buy before you sell product has gotten us a lot of traction over the last few months since it's been available, and we're doing, as Sam and Will have pointed out, we're doing a lot of webinars, a lot of worthy experts. Don't be shy about tagging us for help. We're happy to do it. But I'm here to tell you about the fast funding HELOC that we're offering. It is fully automated. We fund anywhere from within 3 to 5 days. It is a standalone. It is first, second, or third lien position. We go up to 400,000. terms of 5, 10, 15, or 30 years. I already mentioned the fast funding in as few as 5 days. It is completely automated. It is 100% online application, and lower rates compared to personal loans and credit cards, and gives you the ability to pay off other expenses. Where we are different than most of the HELOC products out there today, our brokers have the ability to make up to 200 basis points in comp. And there really is, because it's fully automated and online, there's really no processing required. I think what sets us apart is our interface and the ability for the loan officer to go in and really, get the borrower's information into the system. Once they get that the application has been accepted, basically they send the link to the borrower. The borrower goes in and completes it and uploads any income documents that may be needed, and it is ready to go. It is that easy. And again, this is a situation where we all have those borrowers in our pipeline that are sitting on a 3 or 4% interest rate that don't want to touch that first lien. And so, but they are also sitting on a mound of credit card debt, at 25 and 30%. It gives you the opportunity to come in and kind of be a savior and help reduce some of those monthly payments and get them the cash they need to accomplish their goals. Next slide, please, Amy. Here's the current coverage map. As you can see, and kind of as it goes with the rest of the opportunities here, we are fast approaching 48 states. The next big one, I would say, for those of us in Texas. I live in Texas. Will's in Texas as well. HELOCs are coming. We are about I would say under 30 days away from offering HELOCs in Texas, and it's going to be a big opportunity for our partners because of the limited competition that is out there in the great state of Texas. So next slide, I think that goes into.
So there are some great questions coming up. Maybe Philip, if you want to take them, anything you can talk about the guidelines. What is the max combined LTV, or can you do HELOC with the new construction appraisal where the house is not complete yet, but with the newly closed loan, the customer has not moved in? So we are getting some questions, like anything you can share on the guidelines about how these HELOCs work or who will qualify?
Sure, I'll touch on some. On the last question there with new construction, no, we cannot touch that one. It would be, basically, it is, existing property. We also do investment property on the HELOC as well. 620 is the minimum credit score. Again, it is automated. There's not a lot of documentation that the borrower or the loan officer will need to provide, and so because of that makes it a pretty quick automated process. And happy to take additional questions as well, Harish.
All right. So Philip, in your experience, one of the pain points of brokers is, at least the mindset is, they're not going to make enough money on HELOCs. That's why they are not typically interested. But 200 basis point is a fairly decent compensation. And do you have any statistics, or maybe Will, if you like, how many HELOCs does a broker need to do so they are at par, as if they are doing a few refinances at a month? Have you gotten any feedback? Like, given you are paying them 200 basis point, which is
absolutely
like 5, 6. Go ahead.
Yeah, absolutely. I think the loan officers that we've seen that have really engaged with the product, it really comes down to, they're sitting on their pipeline of opportunity, and it takes very little to market. It takes zero processing. So there's really no effort, little to no effort in terms of originating a HELOC with the loan store. And because of that, it's, what I would call mailbox money. It's, I hate to say side hustle, but you can spend some time mining your existing pipeline and your existing, customer base, and reach out to those borrowers that you've closed in the past, that you've got a great relationship with, that you do 2 or 3 of these a month. I mean, we've got loan officers that are doing 8 to 10 to 15 of these a month, and again at 200 basis points, at an average loan amount at 250,000, it makes a big difference. So
yeah, I'll jump in there to echo and kind of add to what Philip said. We have seen some high proclivity users. I think that's kind of like the 10% factor where they get into a rhythm. I would say the larger opportunity though, and we've been very intentional about this, right? We reduced our overall revenue to increase the compensation to 2 points from 1.75. There are others who have similar products who are at the other level. We wanted to step in. Obviously, that's not an impact to pricing. It's just we took the revenue hit because we want to help originators to bring in more revenue. We made that decision over the last month as interest rates went up on the first lien side. So what I would say is there is an effort, and it's more on the marketing side. And so one of the things I'm really excited about, we're developing the ability to market with our customers for our customers, because we have talked to a lot of our partners that just, they understand the opportunity. Some are running with it, as Philip said, doing 10, 12, 15 a month. And that's bringing in a nice little income, incremental income opportunity. There are a lot of other partners that are either still very busy on the other side. The one consistent theme that I hear from both originators and from our account executives is we're still really busy, right? Like we're all still incredibly busy. We may not do as many loans in the end of the day, but there's still people who need a lot of help in this market, right? And we're talking through very difficult and challenging scenarios and doing our best to leverage our expertise and all of our resources to help those people. And so all of our folks are still reporting, that they're just as busy as they were when they were doing, 3 or 4 times the loans. And so I would say there is an opportunity play on your time. What I would say to those of you who are new to our HELOC offering, look at it as the best ROI on your time, because as Philip said, it's a simple input, it's a little bit of information, and then you can tee up a link to your borrower. Then your borrower is going to go through an automated experience where you don't have to process the loan. There's not a lot of back and forth after that fact. It fits, it rolls, and they're getting their money, tapping into their equity within 3 to 5 days. It's pretty amazing. So it's a little bit of time invested in figuring out the marketing piece. And what I would offer to you in the next week or so, we're going to step in on that marketing piece. So if you're saying, hey, you know what, I am still busy, or I haven't really cracked the nut into how to delve into, dripping this to my database, then we'll do it with you. We'll do it for you. So soon to come, we're going to help with the marketing piece so that more of our LO base has the opportunity to take advantage of every revenue driver in a challenging market. That is what we're focused on. We want to fight through this market with our partners. We all get through it, get to the other side. There is another side coming. The question is just how far are we away from that? And we're going to help get you there. So more to come on that.
Yeah, thank you. As you guys mentioned, home equity is at an all-time high. People have so much locked-in equity in their homes. The lock-in effect, as they call it, is also everywhere. People don't want to refinance. So this is a really powerful tool. You keep the client, you keep the relationship with a little bit of marketing. All you need to do is send them to a link. It's an automated process. There are no processing fees, no complicated document collection. So the process is really simple. And Will, you nailed it. It's the best use of your time, the amount of money you will make with very little time invested. And good to see you guys are supporting our partners in marketing. How do they do that? So it's great to see that.
Yeah,
any other questions?
Just one last thought: stay engaged with your database, or someone else will.
Yeah, absolutely.
In addition to home equity being at record levels, so is overall credit card debt, and your database may not proactively reach out to you and say, "Hey, I need help, right? And I'm not going to touch my 2.5%, 3% mortgage. So if you're not asking the question, then potentially, someone else is taking advantage of that opportunity to engage with a customer of yours. So we want to keep you close to your customers. We'll help you with the marketing side of that. We do believe that sometime next year, rates are going to break to some degree, and you want to stay top of mind because there is obviously a tremendous refinance opportunity on the other side of this market.
Definitely. We have a few questions that I think maybe we can just jump into quickly. So what are the fees like? Are they minimal? Is there full escrow and title on these? And then do they have to qualify with their DTI if they're paying off debts? I mean, how involved do we get with all of that? Are they even looking at that DTI calculation, or is this more of an equity position type loan?
From the fee standpoint, very minimal. As you said, it's not a full title, and you don't have the full closing fees that you normally would on a first lien a primary transaction. On the DTI piece, it's all automated. They look at it, they look at the income. At this point, I will say, because we do get the question from time to time about paying off debt with the equity loan at this, in order to qualify. And at this point, we are close to rolling that out. But at this point, they would basically get the cash. They would need to qualify with the debt, but certainly the intent is going to be to pay off those high rate credit card payments. So hopefully that answers the question there, Amy.
Does. And is this only available for primary residence, or is this an option on second home or investment?
We do seconds and investment homes.
Wow. Okay.
Yep.
And are there any loan limits, like minimum loan amounts for HELOCs, or can you borrow anything, or it has to be at least 25,000, 50,000? Do you have any limits on how much the minimum loan amount should be for HELOCs?
There is, and it's escaping me, but I believe it's 75,000.
Okay, no, that's. And this recording will be available on our YouTube channel permanently. So if you want to go back and listen to this, it'll be available. We'll also share contacts of our panelists towards the end, so you can kind of shoot them any questions which you might have after this. So
yeah, we'll offer more deep dive on any specific lane that you want to go deeper into, whether it's buy before you sell, HELOC, or hard money. So we want to give you guys a high level understanding in this presentation. And then if you want to go deeper, as Harish said, he'll give our contact information, and we'd love to engage with you guys.
Perfect. So if we want to move on, I know, Will, you're pretty excited to talk about the consumer rewards program. So we'd love to hear.
Yeah, this one's fun. Our desire here, and speaking from as a consumer myself, I'm very involved in the gamification side of earning points, whether it's through my Bonvoy or my American Airlines. And, we've wanted to do something like this for a long time to reward our consistent and loyal partners. And so we launched it just last week. We've had a lot of great feedback on it. This is our first step, right, into having a full and wholesome consumer rewards program. We call it consumer rewards because it gives you the ability, you as the broker, the ability to reward your customer with a better price or better experience, right? And you earn those points via, consistency with us, right? So the first area that we're focused on right now is HELOC production, right? And the reason that we started there is one, we want to kick the program off, and we want to develop all the infrastructure to give you guys the visibility and tracking that you need. So we're kind of starting in an incremental fashion through different segments of our business. But the first thing is, I've recognized in doing a lot of presentations and talking face to face with a lot of originators that there is a lot of meat on the bone. There are a lot of folks who are not focused on marketing second liens. And I really feel like it's important for the originations community to really have all the irons in the fire that they possibly can, especially heading into the winter months, with 7.5%, 8% rates, right? So we're trying to emphasize the second lien portion of our business first, really on behalf of, our desire to make sure that all of our broker partners are fed in the toughest winter months that we've seen in this industry, potentially ever, right? So let's start with HELOCs. The more HELOCs you do, the more points you will earn, and then you will be able to use them for, a new loan, right? I mean, that's the whole idea that's really fun is you can use points that you've earned on HELOC production to go get more new first lien transactions, right? You can go up to 40 basis points in concessions to win a new loan, right? So you're rewarding the consumer with a better price. It's rewarding you for your loyalty and your production with us by giving you the ability to go out and earn more business and give your customers a better experience, right? You can rush files, you can do all kinds of fun stuff like that. And then, our next step will be to add more programs into the mix. So the next step here shortly, I believe next week, we're going to roll the ability, which transitions to our next topic, to roll in any production from the hard money side, right? So we own a hard money lender as a subsidiary, and Philip's going to talk more about our hard money offering, but we're going to roll that in as well, and so you'll have the ability to earn points based on that as well. And this program will continue to build over the coming months to be more comprehensive. Buy before you sell will come after the private money stuff. So very excited to reward our partners for their consistency and their loyalty.
Yeah, no, this is great. Will, I think you guys are market leaders coming up with these concepts where you're thinking of brokers first. How can you reward them, for doing things which are for their benefit? If they are doing HELOCs, it benefits them and they get points, which can then be used for, better pricing, waiving of fees. So that is amazing. Out of curiosity, do these points expire as a consumer? That's the first question that comes to my mind. So I don't want to put you on spot, but do these points expire?
No. It's fun to me because we're all very involved in creating the right considerations around this program. So the answer is, if you are consistent in your production with the loan store, right, and we want to value consistency over everything because it benefits our partners and it benefits us, right? From an efficiency standpoint, if we're doing business every month, obviously it's going to create a better experience and there's going to be a lot of efficiency gained on both sides. So if you're consistently doing business with us every month, your points will never expire, right? Absolutely. Otherwise, it's a 90-day time period where you would have to use those points.
I see, but that is helpful. But again, congratulations to you guys for coming up with these ideas. I know this is, you're going to take hit on your revenue. 40 basis point is a lot of money to give away to our partners, but this is something really unique. So appreciate you guys doing this for brokers.
It's an investment, Harish. Right now, what we're doing is we're investing a lot in just stoking the relationship flames. And really getting everybody through this challenging aspect of the market, right? That's the way that we see this. We are absolutely leaning in to the broker business, and we want to be there to support you in the tougher times, and then we'll grow on the other side of it.
All right, just to our segue into hard money. So maybe Philip, do you want to talk about this?
Yeah, you got it, Harish. And as Will pointed out, we do have a sister company, Old North Capital Fund. That is our asset-based and hard money lender that we are happy to partner with. We can move on to the next slide. It is a true hard money loan. This is an investor loan. It is, typically it is, the four products that we offer is fix and flip. New construction, which are typically the two most popular programs right now. We do offer bridge financing and a transactional product as well. And I do want to point out that this bridge financing that is offered through Old North is completely different from what we offer through Buy Before You Sell. It is, again, this is a true investor program. It is like the HELOC program. It is very minimal effort for the loan officer. It is, you guys, the loan officers are on the front lines. You see, different requests and different needs of your borrowers and your customers that you've established over, a long period of time. And this is just one more offering for you to help your borrowers and your customers out. Typically what we see, again, this is a hard money deal that rates are in the 12 to 13% range. Origination cost and closing costs are in the 2 to 3% range. And then as a loan officer, you can make at up to 1%. We've seen some transactions that have gone a little higher than 1%, but again, this is not a typical conventional product, or you don't have those documentation requirements for this product. And what I mean by that is we really look at 5 items that make this go, and basically how easy it is. You're sending the scenario and these 5 items over to us, and we evaluate it within 24 hours. We come back with an offer if this it's something that we're interested in, or let you know that we may not be able to accommodate. But those 5 items are basically a purchase contract, an itemized budget, current property photos, a survey or plans if it's a new construction, and then the borrower's LLC documents and the prior experience. So that's it. That's what we're looking for. We're not looking for a 1003 or income docs or asset docs or anything like that. It is again, true hard money deal. We run it through some models that we have, and again, within 24 hours we'll come back to you on a potential offer. So the states here in blue are the ones we're currently in. California is a big one, and it is coming soon. And I will say this from a licensing perspective, again, because this is a referral and it is not a true kind of mortgage transaction. If you've got opportunities in any of these states, even though you may not be licensed in these states, you can certainly help your customer if they are in any of these states or in the light blue. So that's our hard money program through our sister company Old North. And Harish, I'll take some questions.
Yeah, no, thank you. I think it excites both Amy and I are based in California, so we are super excited to see it'll be available in California pretty soon. So,
yep.
Yeah, you nailed it, Harish. This is something that our broker partners have been really excited about. And me, I mean, I've been in wholesale for 20 years, and being able to equip brokers with the ability to do hard money is a rare thing. And we're really proud of to deliver that to them, right? So it's just, look, you've got one referral network, and we want you to be able to, take full advantage of it, and really help the people that are already in your circle, right? Rather than having to refer out those opportunities. And that's really why we felt that it was a great idea to purchase Old North in the first place. And obviously, as we're ramping that aspect of our business up, it's been a great experience for our broker partners.
One-stop shop, absolutely.
And just real quick on the hard money, is this something that the LO would sign up for? Did they get information from the loan store directly, or would they need to actually check out that website that you shared for Old North Fund? Yeah,
I would say contact your account executive directly. And as Will pointed out, in what we do for just not only hard money, but for HELOCs, for buy before you sell, we do offer really deep dive sessions every month. And again, our account executives can provide you with the information you need for one of the deep dive sessions, or additional information to help market these products to your referral partners as well.
Yeah, and to add to that, we have a deal desk, right? So I remember yesterday we were at a conference. We're talking to one of our partners who's done, I don't know, he said he had sent 6 or 7 deals over. So he remarked that his favorite thing was you just send the details and then they sort it out, right? So we don't expect you all to become experts in, this aspect of the business. We have the experts. So you just need to connect the dots, and we will sort through it and confirm what we can and can't do.
Perfect. And we'll share some information at the very end for everyone who's watching and wants to know how to get in touch with the loan store, how to ask questions. We've got a phone number and email. But we do want to give Teresa some time to talk about operations and just what is it like to partner with the loan store. So Teresa, we'd love to hear from you. Thank you for joining.
Thanks, Amy. I really appreciate that. And thanks for having me. I mean, operations is, I think a little less exciting than all of the things we've talked about today. But what I really love about operations is a couple of things is, I got the opportunity to sit down with Fannie and Freddie at the beginning of the year, and they were very, very clear around what they were going to do this year around affordability. And that wasn't going to be through interest rates, which they definitely came through with that promise. But that's what I love about the loan store is that we've gotten into these other, like buy before you sell is really huge for us, the HELOCs. But what goes along with that is as you're out there talking to your relationship partners, whether it's a real estate agent or borrowers that continue to come back to you, is it gets in, you've done all this work, and then what happens? It gets, I'm sure everybody's had the experience, it falls apart in underwriting. The underwriters at the loan store are very, very tenured. They understand complex situations. They will get on the phone with you trying to figure out how do we make this work within the confines of our guidelines. So understanding that they have a multitude of experience and knowledge in various products, whether it's FHA, VA, your conventional, non-QM, jumbo, the buy before you sell, any of that stuff I think is incredibly important in this environment. On top of that, I am a very, very big believer in relationships. And I think that comes from just one, coming from a sales background way back 20 plus years ago, obviously in operations, and that's where my passion is. But understanding that there is a relationship there between operations and our partners, because that relationship goes deeper than just, we talk to each other every day, right? As an underwriter, I can't be expected to understand all the nuances of California, Texas, Florida, New York for when we get there, Chicago. It's that we have alignments there so that you're working with familiar faces, you get to know each other, you understand the ins and outs of that. But again, I think the biggest part that I love about the loan store is that our sales team and our operations team have the same goals. And that is to connect with our partners, make sure the experience is top notch from beginning all the way through the funding, making sure that, that we understand that your relationships are incredibly important, and they're few and far between now, right? The transaction. So making sure that your real estate agents are as confident as you and making you look good, we want to do on the operation side. And the way that we do that is by being very knowledgeable, having a lot of experience with complex situation and various products. So I know we're about out of time. I thank you for the opportunity to be able to share my passion about operations, but I look forward to those that haven't worked with us before, giving us an opportunity to make you shine. And for those of you that have, we really appreciate the trust, and we'll continue to knock it out of the park for you.
Yeah, I'm gonna have to just jump in real quick and give Teresa some kudos, because she's a complete badass, and so is her team. But yeah, it's very rare that you find a sales team and an ops team that are really in sync like ours is. And it's something that we want to nurture. It's hard to design it that way, but it really is a testament to just a little bit of luck and then an intentional focus around getting the right people. I'm not going to go into the way that we talk about it inside the halls of TLS, but we have a very low factor of people that aren't aligned, right? Is that right? Is that a clean way to say it, guys?
Probably
Yeah.
the
That's
keep it on
great.
national conversation.
Thanks, T.
So the contact information for Loan Store, I think someone is asking, how do I get approved with Loan Store? So reach out to this phone number or this email address. If you're on Arrive, within Arrive also, you can sign up directly on the homepage. There'll be a little icon to say sign up with Loan Store. So you can do that. But we also have contact information for the executives like Will and Philip. They're very accessible. You can reach out to them. They'll get back to you. We still have a ton of questions, but as Will mentioned, we would encourage you to get signed up with Loan Store team or get signed, contact Will or Philip, and they can arrange a specific deep dive on these sections on HELOCs or hard money loans or buy before you sell.
Yeah, and I would just say for all of you that asked questions, this is a tremendous amount of engagement. We've done a lot of calls like this, and this is one of the best as far as an engagement standpoint goes. So Amy, let's make sure that we take away all the details here for the ones that we didn't get back to. We will follow up with you all and make sure that we have high engagement. We can answer all your questions and go deeper into any scenarios that you have. So we'd love to do that, and we'll follow up as soon as we can.
Wonderful. Thank you all so much. I just have a suggestion. Maybe instead of the TLS, it could be TTP, the total package. It sounds like you guys have it covered from start to finish. Thank you again for all your time. You shared so much knowledge on so many products, way more than we can cover, but you clearly have it all covered for the brokers if they can just reach out, work out with their AEs to figure out how to put these loans together, send more business and gain more business in this market. So thank you so much for your time.
Yeah. All right. Thank you, everyone. We had a spooktacular session. How about that? And happy Halloween to everyone. But yeah, thank you so much for your time.
Thanks, guys. Good job. Appreciate it.
Everyone.
Thank you.